Today, I'm going to tell you about two important belief systems that I find really useful for great trade management. I'm also going to discuss stop placement, using context to drive your trade management decisions, and having a process for paying yourself. If you don't already know, trade management is as essential as any trading topic out there. Here are two important belief systems that can help immensely with your trade management. Because at the end of the day, the best trading occurs when we can get out of our own way. Number one, anything can happen. Trade management will never be perfect. So stop switching styles based on the recency bias of what happened on your last trade or two. Anything can happen at any time to just totally disrupt what would have otherwise been a perfectly good trade. Accept this. Lighten up. So when you're having a losing trade, or if you're reviewing a losing trade, remember, there's not always some key market magical insight for you to learn from and to now tweak your trade management process for. I'm not saying there aren't lessons to be learned sometimes. Of course there are. But collect larger amounts of data on what works, what doesn't, before you go turning what you've got going on upside down. Belief system 2, you want to risk money in order to find out if a trade is going to work or not. That's just the game we play. Let's say it again, all together now. I actually want to risk money where I'm supposed to in order to find out if a trade is going to work or not. Identify where putting risk on is appropriate and then just do it without hesitation. This will help you move from fear of losing towards wanting to put the risk on. And this can really help you be in the right frame of mind to manage a trade properly. Next topic, stop placement. Dynamic is best. Don't listen to someone that just says just use a fixed stop of 12 ticks or 2 points or whatever. Volatility ebbs and flows over time. What works in a low vol environment will get you wrecked in a high vol situation. Two main schools of thought with stop placement. You could simply put your stop beyond a key area or inflection, knowing that if your stop is hit, hey, that whole trade idea, that thesis, it's over. I don't want to be in the trade anymore. The other is to drop down to some form of lower time frame and to time shorter term rotations there and use that lower time frame timing to tell you where to stop out. This is different than the first, not only because we're using lower time frames, but importantly, you could get stopped out of a trade. And in this case, the overall trade thesis or idea for that is still absolutely valid. This is important to note. You can separate overall trade management from overall trade idea. This is how I approach stops personally. And the one thing that you have to add to your trading, if you take this route, is the ability to re-enter trades. The thesis is not necessarily invalidated yet if you're stopped out. You just didn't get the short-term timing right on your first entry. Wait for it to set up again, if it does, and strike aggressively. I also choose the lower time frame method because it offers a higher risk reward by nature, although be aware it comes with a lower win percent by nature. But this works for me because I've worked hard on my timing skills, my ability to read order flow, those type things. If your skills aren't so great in those areas, hey, we're starting up an intensive live NADRO methodology course. Click above or check out the description below for more info on that. Now, let's talk about knowing the context. Most of you know my phrase, context is king. This is everything. Knowing the context tells me where I should scalp smaller moves for quick profits. It tells me where it makes sense to hold for bigger moves. This is all based on market-generated information, not what I might think or feel at the time. Very important distinction. For a simple example of context, see this video by clicking the card above. So let context have a say in your trade management, not just your short-term charts and order flow. Pretty sure I just said context. It's context. Okay, let's talk about one of my favorite things, process. A set of actual rules you can follow. I know most of us hate rules. Without this, though, you'll be forever subjected to making emotionally driven, aka bad, trade management decisions. You've got to let go in order to do this. It's really letting go in the short term so that your longer term plans and process can drive your trading actions. Therefore, drive your trading results. Don't let short-term impulses drive the trading. Let process. One of my favorite things I say to myself is, my process is a better trader than I am. This really embodies the thought around not allowing my wants or needs in the short term to drive my trading results. Okay, one last bonus tip here. Find a way to enjoy your trade management process. Find a way of holding trades over long or short periods of time based on really getting a sense of satisfaction when you do it well. Also, just don't forget to enjoy trading. And don't forget, we have that live intensive method course coming up. Check out the link below. Trade well.